are we are about to discover how to avoid a $591 a day penalty. I don't know if you've ever heard of the Corporate Transparency Act. However, you need to hear about it because most of us are going to have to comply with it, and many of our clients will have to comply with it. So I'm going to talk about how to navigate the new FinCEN beneficial ownership reporting requirements. It is actually something that everybody is going to have to comply with who has a small LLC or corporation. We're going to give you a link to the Corporate Transparency Act guide, which you will need. And please, while we're looking at this, close or minimize your other programs. It's pretty intense. Silence your cell phones. And at the end, please keep your questions general. I'm your instructor along with Patty Lurch. And of course, you're familiar with our credentials. Today, we're going to be actually giving you this through our other company called Retired Plugged In. Retired Plugged In has membership for retirees and for advisors. And in that, you would keep up to date on new regulations and rules, tax updates, IRA answers, curated industry information, and much, much more. We are going to be opening that up soon, and if you'd like to look at it and get a discount coupon, you can email me at nora@solutionforyou.com. Our goal is to educate and empower you so that you can help others to navigate the retirement issues and get all the information they need. So let's first go through a disclosure. This material is provided courtesy of Retire Plugged In. It's general information. It's not something that you should use as legal information. We're educators, and this information was sourced from the Bradford Tax Institute and Martin Shankman reviews of the Corporate Trustee Act. In fact, that was 5 hours that I am trying to condense into a little more than a half hour. We are going to go through the basics, and at the end of the workshop, of course, you'll be able to ask some questions. The purpose of the Corporate Transparency Act, why does this even exist? It exists because they want a national database of companies in the United States. They want to identify the human beings behind the companies and combat money laundering, terrorism, tax evasion. The rules and reports will be uncomfortable and non-compliance will be costly. Who will the Corporate Transparency Act affect? Well, believe it or not, it will affect the owners, principals, and control persons. I didn't say just owners. You'll see why in a moment. Small LLCs, corporations, limited partnerships. FinCEN estimates 32 million existing small companies plus 5 million new entities a year. And here's the part that's kind of scary. That's going to affect a third of America, and here's why. When we say 32 million companies, it also affects more than just the owners. Will there be any exceptions? Exceptions will be discussed later, but advisors, attorneys, and CPAs should inform their clients because time limits apply before horrendous penalties are assessed. Who is FinCEN? Who's doing this, and why do we care? Avoid being caught by surprise because this is the Bureau of the Federal Treasury. They handle the prosecution of federal crimes, and non-reporting is a federal crime. What is it that FinCEN wants to know from us? Well, when they look at these corporations, it's like a glass that you can see there's something behind it, but you don't know what it is. They want to know who's behind all of these companies. They want it to make clear not only who owns it, but who controls the company. So we're going to cover the problem that Congress perceived was there's no central database. In fact, a lot of people are hoping this will go away, but I doubt that it will because every other country in the world seems to have this but us. So they want the beneficial ownership interest reporting. Remember, it's not just ownership. What is the Corporate Transparency Act? Who is FinCEN? FinCEN is going to look at everybody who has any control or ownership of a small company. Is this necessary? Is it overkill? Is it both? Why do we care if we comply? Let's look at the highlights of this. Is it a nightmare on Elm Street? Well, it's a debate. accountant's job or not, attorney's job, advisor's job? Will the beneficial ownership interest reporting rules do any good? That's a good question. However, we're all going to have to comply. By when do companies have to report? What is it? Let's go through the highlights. Here's the questions on the table. Who reports the beneficial ownership interest information, the company or the owners? Which companies need to report and which companies need not report? What are the consequences of late reporting and who is a beneficial owner that must be reported? So you see this couple here, they're running a small business, very small. They will have to report. We are also looking at having to report the person who filed my company. What? Filed my company? Well, for instance, I had a company make my small LLC, and they reported it. Do I have to report them? In fact, we're going to look at that. Some do, some don't. What info must the company report? When does it have to be filed? What is going to happen if there's an inaccuracy in what you file? We are looking at another challenge for all of us with the estate plan because trusts get involved in this. Beneficial ownership interest reporting has hot spots, and one of them is if you have put it into your trust. Another is we cannot do consolidated filing. For instance, I have 4 companies actually, and I cannot consolidate that. And if you do it wrong, it may be fraud. There are deadlines, and deadlines. Keeping 30 days versus 90 days straight. Here's something a little bit weird. The sooner you file, the sooner you're going to have to make more filing. And we'll go over that. I'll give you an example. Kim is a rabid fan of remodeling. She has an unquenchable desire to remodel. So she wants to do more to her house. She wants to earn a little money on the side. So she establishes a company to remodel other people's residential porches. She goes on LegalZoom to set up her own single member LLC. She doesn't retain an accountant or a lawyer. She contracts with several neighboring homeowners to remodel their porches. What are her responsibilities? Is it important to know? What if she misses some? Well, here's her responsibilities. First of all, her small LLC is disregarded for income tax purposes. She reports it on her own income tax. The state says, hey, you have this small LLC in our state. You have to do an annual report and pay a related fee. In Virginia, it's only $50 a year, but you have to pay it or your company disappears. Federal law now says she has to report through the Corporate Transparency Act, the beneficial owner interest. What is that? Well, Kim's company has to report not only the opening of her company, but any changes in the company. So she has to report about herself to her LLC so her LLC can report about all the owners. And if she doesn't, there are brutal penalties. So we do not want to non-comply. Congress said, hey, there's no central database. So they passed the William M. Thornberry National Defense Authorization Act for fiscal year 2021. It contains Anti-Money Laundering Act and the Corporate Transparency Act. Why? So illicit actors who use LLC structures as shell and front companies cannot get away with it. They can't obfuscate their identities. They want to identify the current criminal actors, but in that, they're putting criminal charges on us if we don't comply. Who will enforce this? Well, the Treasury Department has 3 divisions. One is the IRS. We're all familiar with that. Another is the Treasury Inspector General for Tax Administration, Fair Administration. But FinCEN is the third. Financial Crimes Enforcement Network. So who's going to enforce this? We're not sure yet, but guess what? We're pretty sure it's the IRS. Why? Because they get our tax return every year and know if we have a small LLC or corporation. Why do we care if we comply? It's not a crime to not comply. It is a crime to not comply. You can actually go to jail. Reports have to be filed and non-compliance penalties are steep. Question is, should professionals such as us help clients comply? If a professional doesn't handle appropriately, it could be malpractice. If they're not competent to handle, it could be an ethics violation. But clients are exposed if someone doesn't tell them about it. Reporting starts this year. So you need to learn the beneficial ownership interest rules so they don't bite you, and make sure that your clients are aware of it, even if you won't be filing for them. And if you are thinking of filing for them, make sure you have an engagement letter that sheds your responsibility for what's reported, because you're using their information to report. Is this reporting too complicated? And who's required to file it? Is this a nightmare or an opportunity? It depends on how you look at it. Gear up, learn the beneficial ownership interest rules. You can offer compliance as a service, market it to clients, law firms that you're filling out or assisting filling out, but run it by your malpractice insurance carrier to make sure you're covered. Send a letter to clients or the client's attorney, include the info needed for the beneficial ownership interest report, and maybe you don't want to be a part of it, but you'll help them get the information together. So who should complete the report? Should it be an attorney? A lot of clients just did LegalZoom. They don't have an attorney. An accountant? Well, accountants are compliance oriented. They usually meet with compliance annually. They're likely to know of changes to be reported, but it could constitute unauthorized practice of law. What about an independent service? There are a couple of them out there who are going to specialize in that. The IRS's beneficial ownership info FAQ says either an accountant or attorney may file the report. It's not required to use an attorney or a CPA, and a company can file using the FinCEN guidelines, which we're going to talk more about. So should it be the attorney, the accountant, the advisor? What are your obligations to your client? What are the risks associated with assisting them? How do you manage or minimize these risks but still assist them? Well, I have good news if you take the time to do it. Schenkman Law has a 2-hour webinar aimed at professionals, free for your review at schenkmanlaw.com/webinars. It's called the Corporate Transparency Act Deeper Dive. And it's a 2-hour webinar, and it does address professionals and what you should and could do. What is the due date for all this filing? For entities that were already in existence before January 1st, 2024, the initial report must be filed no later than December 31st, 2024. Efforts to compile information, though, can take time. So what do you mean efforts to compile information? Well, you have the information about your corporation, your officers. Some people put these things together 10 years ago. They don't even know where their paperwork is. So it might take some time to get everything together. For new entities in 2024, originally they only gave you 30 days to report. It's been extended to 90 days. And starting in 2025, we go back to the 30-day rule. You open a company in 2025, you have 30 days to report. Congress may extend the filing date. I doubt it. The House did pass a bill deferring it another year, but it would have to pass the Senate and be signed into law, and we doubt that's going to happen. Who is a beneficial owner? Well, you'd think that's simple. You know, I have a small LLC. I'm the owner. That's pretty simple. Not quite. It's not just the owner. A beneficial owner is anyone who ultimately owns or controls the company. Well, I own it, so I must control it, right? Well, no. They also say somebody helped you apply, perhaps. If you applied through another firm or an attorney applies it, then that person has to be included in your filing. And if you had an attorney firm do it and the attorney prepared it, but somebody else pushed the button to make it go off to the FinCEN, then both of them, you have to have all of their information. Now, some beneficial owners who are not really owners may object to this, but the failure to report, there's an up to 2-year prison term and very large fines. There is an alternative, though, to just giving everybody's information, and that is each person can get what's called a FinCEN identifier. A FinCEN identifier is a unique identifying number that FinCEN issues. It can be issued to an individual or the reporting company. Now, if you have a reporting company, and for instance, I have a small LLC, my husband is my CFO. He's a controlling person. He has to be in it too. But add to that, that I have put it into my trust. So it absolutely has to include my husband because he's in my trust. If you get a FinCEN identifier, then no one can see all this private information because you've got to give them your passport or your driver's license, your date of birth, and all kinds of information. And all that's available unless you have a FinCEN identifier. So once you submit that information and get a FinCEN identifier, nobody else sees it. However, you must keep that FinCEN identifier up to date. That simplifies the burden for the company if you have additional people involved. But the question is, what do we mean by up to date? Well, up to date means if you change your driver's license, if you renew it, you got to report it. Is FinCEN identifier a lifesaver? Well, it does hide your personal information. It makes reporting easier. It makes changes easier. It relieves the company of reporting the individuals. Or is it a poison pill? Because if you make everyone get a FinCEN identifier, then they have to keep their information or they're in violation of the rules and could have these horrendous fines. All right, all of this, what's the deadline for this? Well, we said if it's formed before 2024, you have until January 1st, 2025. They may delay it. You're going to have 90 days this year. It was originally 30 days if you formed a company this year, but they've extended it to 90, but next year it'll be back to 30 days. But that initial report is not it. It's not over. Once you've done that initial report, you have to do all updates. What if your CFO leaves your company? What if somebody who's helping you with investments for your company changes? What if your driver's license is renewed? All these changes must be reported and updated within 30 days. Any inaccuracies in a filed beneficial ownership interest has to be corrected no later than 30 days, and there's no way to escape with any excuse. If you become aware of a change of anything within the company and you had reason to know it, they expect you to do it within 30 days. So is anybody off the hook? Well, there are some exceptions, but they're pretty narrow. Non-reporting companies, entities not created or registered by filing with the Secretary of State, for instance, sole proprietorships, where they never actually opened a company, a general partnership, certain common law trusts. However, if a personal trust owns an interest in a reporting company, that trust can be drawn into being reported, not because it's a trust, but because it's an owner. Are there exempt companies? Yeah, they do not submit these reports. Who are they? Well, banks, credit unions, public utilities. Well, yeah, because they're already highly regulated. They already have their information. Tax exempt entities and large corporations, we're going to look at what does that mean? And those already subject to extensive and substantial federal regulation. So let's look at who's off the hook. The exemptions are very narrow. Here's the list of exemptions, but we're going to go over how they are, but they aren't. Securities reporting issuer. Well, okay, most of us are not that. A governmental authority, bank, credit union, a clearing agency, Exchange Act registered entity, venture capital, investment company or investment advisor. Well, a broker dealer in securities. That's interesting. Some of us are that. Investment company or investment. Well, here's the part. An investment company or investment advisor, it doesn't look like it means you and me. It means the big companies that are investment advisors, not you and I. Then we have another list, and this list is interesting because, again, there's caveats on everything. A state licensed insurance producer. Okay, I'm a state licensed insurance producer, but I also have a company that has other producers. Am I exempt? We don't think so. An accounting firm. Oh, good. I'm an accounting firm. I don't have to comply. Wrong answer. When you read the details, it says, unless you're an accounting firm that audits securities companies, you're not exempt. A tax exempt entity. Well, you would think that would mean churches and everybody else. Not really. You have to be tax exempt only by a 501A, not a 501C. And then we have a large operating company. What does that mean? What's a large operating company? And an inactive entity? Who's an inactive entity? Well, as we said, it's very narrow. Who is a large operating company? A large operating company has greater than 20 full-time employees and a return last year of over $5 million. Now, if you fall below 20 full employees or below 5 million, you have to file. And you have to file a change every time. What about if you willfully don't do it? Well, if you falsify information or you don't do it, the civil penalties are up to $591 a day with no cap. For 100 days, that's $59,000. For a year, we're well over $100,000. The criminal penalties are 2 years and a $10,000 fine. And both criminal and civil penalties can apply to the same thing. And there may be more than one person liable for the same violation, depending on who's in your company. Wow. What if personal trust owns an LLC? If a trustee is a beneficial owner, for instance, mine is in my trust, it's in my name only, but the trust is in both our names, so it's me and my husband. The wife is the sole owner, assigned into the trust. The husband is a beneficial owner because he has control of trust assets with his wife, and they are both beneficiaries of the LLC's profits. The LLC, if they have a chief financial officer, even if he has no ownership whatsoever, he is a beneficial owner because he has substantial control. What if both trustees pass? And now we have a beneficiary who's 20 years old, and it now becomes an irrevocable trust, and everything's held in for this 20-year-old until he's 35. Is the son a beneficial owner now? Yes, he is. Is the attorney handling the assets a beneficial owner? Yes, he is. The son receives the benefit, and the attorney or trustee now has substantial control, and whoever was the successor trustee now has to report. If they have an investment advisor involved, he has substantial control, and he has to report. And if you forget to file the changes in a timely fashion, the fines apply to both the beneficiary and the return and the attorney. And what's a timely time? I mean, when somebody dies. Well, people get caught for a lot of reasons. Is it a reporting entity? Yes. Disregarded for federal income tax returns? Yes, but they must report because it's created by filing a document with the Secretary of State. You must file an initial beneficiary report and then subsequent reports. And this is where I think people are going to get caught because subsequent reports have only 30 days. And another question that's come up is, it's unanswered, a community property state. If one spouse opens an LLC and it's a community property state, is the other spouse required to be in the report? To be safe, they're saying report each spouse as a beneficial owner. So here are some hot spots. Reporting company applicants. What does that mean? Well, if you have an attorney prepare your LLC, they are a company applicant. That applicant may be a direct filer. So let's say your attorney prepares it and he pushes the button to send in the paperwork to start your LLC. But let's say he doesn't do that. I mean, he does all the legal work and his assistant pushes the button. Both of them have to be listed. Both of them have to do all the identification. Most entities now, attorneys and so forth, are designating just one person or doing it themselves. The company applicant, even though they didn't directly file with the state, they just told somebody else to do it. They are a company applicant. An entity cannot be listed as the company applicant. So if an attorney has a law firm and he is going to submit this, he can't put his company down. It has to be him and the person who pushes the button. And they must do that initial filing if they open one this year, not in 30 days, thank goodness. This year you have 90 days, but starting next year, it'll be 30 days. Applicants of pre-2024 founded companies do not need to be reported, which is good news. I'd have to go back and find the lady who made my company years ago, but you don't have to do that. It's only those that start this year and beyond. So what must the company report? Well, you'll see here compliance guide. I'm going to refer to this, and there is a link at the bottom of the page. Everybody's going to need a copy of this compliance guide, which, by the way, is over 300 pages. So what do they want? They want info about the company. They want the legal name. Now, here's where people are getting caught. For instance, I have a company that's called 50 Plus Digital LLC, but I don't do business as that. I do business as Retire Plugged In. So you have to report your trade name. So if you've ever used a trade name, you have to report it. You have to report where was it formed. And then here's a question that has not been resolved: taxpayer identification number. Now, wait a minute. If I have an LLC that's an S Corp, I don't have a tax identification number for my company. Do I have to report my tax identification number? Do I get one for my company, but then they're going to expect a return for the company and the company doesn't? I don't know. Info of the company's beneficial owners and applicants, 2024 and on. Or you can get a FinCEN identifier. FinCEN identifier means that you're going to submit your name, address, date of birth, identifying numbers, issuing jurisdiction, driver's license, passport, and you have to submit images of those things. Some people are not that savvy, and all of this has to be done online. What about that poor guy cutting grass who started an LLC and he doesn't even know a computer? Beneficial ownership changes you must report. What are changes you don't have to report? You could ignore. Well, again, we refer to the compliance guide. The beneficial ownership interest changes can be when an owner reaches the age of majority. What if someone inherited a company and there's a legal guardian running the company? Well, the legal guardian reports, but then the person has, and what 18-year-old is going to know to report? What about change of beneficial owners? If the beneficial owner changes his address, updates his driver's license, changes their name because they got married, 30 days or penalties of $591 a day apply. Change of beneficial owner's identity, new beneficial owner if something changes at all. What doesn't have to report? What can you ignore? You can ignore any person that is not a part of the ongoing company. So who's not a part of the ongoing company? Well, the applicant, he's not a member of the ongoing company. He just reports when he puts it in. If he changes anything, he doesn't have to report. What if you terminate your company? Gone. You just shut it down. Believe it or not, you don't even have to report that. You'd think they'd want to know. No report necessary, because they just want to keep your information, I guess. When and how should reports be filed? Well, all reports have to be filed electronically. And I see this, we're talking 32 million companies and more this year. That affects probably 100 million people, because each of them is going to have other people that have to report, their spouse or their trust or their CFO or whoever. That's a third of the country that has to go through FinCEN's portal. There are no exceptions for religious, financial, or hardship. Previously exempt companies, but no longer qualify. For instance, let's say you qualified because you were doing a specific action that qualified you, but now your company's doing something else. Well, you have 30 days from the time you're disqualified or penalties apply. What about inaccuracies? Well, if you find that something you submitted, oh, no, it wasn't that date, then you can go in and correct it. You have 30 days to correct any inaccuracy, but no penalties will apply if it's corrected within 90 days. So when and how must reports be filed? All reports must be filed online at fincen.gov/BOI. This is what the website looks like. Now, when you go to this website, you're going to see, do I qualify for an exemption? You can click that and read what it says. How do I get a FinCEN ID? Which we highly recommend you get a FinCEN ID so all your information isn't all over the web. And then, how do I file a report? And create a FinCEN, which is optional. These are all things that you can do. Now, the next question is, what are the rules? Well, on the site, they have the rules, which are more than 300 pages. The guide is only 300 pages. Unfortunately, a lot of it is kind of murky. And this is one of the reasons everybody's hoping it will at least be delayed. And the other reason that it has been recommended by most of the people who in the know that we don't file it immediately, because if the rules are clarified and it means that your information is inaccurate or not correct, you've got 30 days to correct it or be fined. So most agencies are recommending that we wait until later in the year because they're promised to update information on trusts and update information on other things. Problem is, if we're looking at 32, 37 million applying this year, we can't wait until the end of December. How are we even going to get online? So we need to wait, but we need to be aware that it needs to be done before the end of the year. The guidance is a must read. This is the link for the guidance, and it gives you information step by step. However, a lot of it leaves things unanswered. The compliance guide is your Bible, and you can download that right off the site. And most importantly, don't forget to file on your company, because if you don't, the penalties will apply. But beware, the sooner you file, the sooner updates will be due, and those only give you 30 days or you're going to be fined. Should you file now or wait? Well, the earlier you file, the sooner corrections and changes have to be made. More guidance is promised. Corrections we don't want to have to do because we only have 30 days, but we do have to take care of our own first because we don't want to be giving $591 a day to the government. So we do want to do what we can to take care of our own. So what should I do for my company? The deadline, if you already have a company on January 1st, 2024, is January 1st, 2025. If in doubt, fill it out. If in doubt, send it out. Avoid $591 a day. Avoid 2 years jail time. If in doubt, report. That's the bottom line. I hope you have enjoyed this. This is just guidelines. It is going to be a challenge to keep up with all the rules and understand any changes. I highly recommend that you wait to file, but don't wait too late. And last of all, if you want updates on this, you can look at becoming a member of Retire Plugged In. We are going to be giving more and more information about it. I recommend that you do go ahead and get the information, start gathering your information, and be ready to file. Thank you, and I hope this has been helpful, and we will answer questions as best I can. Thank you. All right. I hope that was helpful to everybody. If you have any questions that I'll try to answer. I'll do the best I can. While she's looking for questions, let me do a couple of clarifications that I noticed I might want to give more information on. One of them that was listed was an inactive entity. And I've already had a client talk to me about her husband's small company. He does some repairs and construction. And she said, well, he's inactive. He's got a job now. He's not really doing it. Well, what qualifies you as an inactive entity? Well, here's how narrow it is. An inactive entity has to have been started before 1/1/20, have less than $1,000 income or outgo during that time till today, and cannot have an asset, not even a bank account with $5 in it, or you're not an inactive entity. So that's how narrow it gets. Any questions, Shalene?
I'm not seeing any just yet, but there usually is a slight lag in the video, so I'm just waiting to
Okay.
see if there is anything.
I have a question for the attendees. Just a yes or a no. Were you aware of the Corporate Transparency Act? Yes or no? Everybody's quiet today. Huh?
Michael Alley says no, he was not aware.
Well, I'm glad he came. We all need to be aware to at least alert our clients. Like I said, I spoken to Shalene before we started today. I had a neighbor come to my door at 5 o'clock yesterday, and he says, "Well, somebody told me you know something about S corps, and I started one because, I retired from my job. He was what we call a Leo, which is a government officer, and so he retired at 50. He's 54, and he started an S corp to uh, kind of save taxes because this big company wants to contract with him. How did he start it? This is how most of our clients probably did. He downloaded something online. He filed for an EIN number, and he still had not filed with the state, but he gave an EIN number and the name to the federal government. So now he is required to report within 90 days for the Corporate Transparency Act, and he has to get his paperwork together. So I gave him some sources to do that. But unfortunately, almost every client I've ever had, how did you start your company? Oh, I downloaded a paper. So, we can do them a service by giving them information. He said, well, maybe I don't want to do this. Maybe I just want to be an employee. I don't want an S corp. I said, you done did it. It's over. I'm sorry.
All right, and then Michael did say thank you for the information, and I'm not seeing any other questions currently.
All righty.
So I do just want to take a moment and thank everybody for joining us today. I hope we learned I know I learned a lot of good information. I hope everybody else was able to as well.
All right. Thank you very much.
Thank you for joining us.
Your help. All righty.